Hey guys, how's it going? Lee here. It's that time of the month again where I go over the most bought stocks in the ASX in the month of October 2020. Top 10. Now what's interesting in this month is that we actually don't see our top 4 banks in the top 10 list. Very interesting because they're generally in there. At least one of them, if not all 4 of them, are generally within the top 10 list. If this is your first time on one of these videos, just to let you know, this list does come from CommSec. And so therefore this does not capture every single trade in all the other traders, but in saying that CommSec is the largest brokerage in Australia, so this does definitely give us some insight as to what's being traded during the month. Of course, before I continue with this video, guys, leave me a like down there. That would be greatly appreciated. And also comment. It's Halloween. What are you doing for Halloween? Let me know in the comments down below. Anyways, guys, speaking of finance, let's delve straight into Fintech. Because if there's one thing that Australian tech has going for it, it's, well, Afterpay and its younger brother in Zip, which are both placed at number 9 and number 2 this month. The two OGs of the buy now, pay later who have still remained relevant, blowing the newcomers off the list. Think of your OpenPays, your Sezzles, what other ones are there? Flexi Group and Splitted. Now, although these two are still highly traded, in terms of news, there was some big news, of which I made videos about, that had come out this month. Now, in particular, Afterpay has actually struck a deal with Westpac, which has given it basically a banking license. And as a result of that, Westpac has pretty much sold its stake in Zip, which it had a large holding in. About 55.2 million shares that they sold off and made about $367 million in profit. That's right, profit. Now that type of investment for a top 4 bank, which is rather conservative, is amazing. So kudos to you, Westpac. You've got a lot going on at the moment in terms of investigations, but just take the wins as they come. Great job. And I'm happy as a shareholder, of course. Anyways, moving on from the buy now, pay later lads, we've got NDQ. Yes, the ETF that keeps floating around as Australian investors look to get exposure to the American market. In particular, the top 100 of the NASDAQ. Many of which we would be familiar with. Think of your FANG stocks, of which I might, do a series on. Very interesting because I use a lot of the services. But if we have a look at their returns in comparison to the Australian returns prior to the Rona, they've actually passed at one point the all-time high. Another reason why this ETF is so popular is because, well, it's significantly cheaper than the alternative in IVV, which tracks the top 500 of the S&P 500. But in saying that, IVV is much more diverse because it has 500 holdings as opposed to 100, but it does come at a whopping $470 a share. Now, I think NDQ will stay in the top 20 for quite some time, as we look to, well, diversify and go into the US, which I've mentioned before in another video. I think there's so much more innovation. The customer base and the addressable market is so much bigger over there than the opportunities we would have in Australia. And any big tech company in Australia that makes it big always goes over to the US, which makes up about 40% of the worldwide share market. And let's be honest, not too much is happening in Australia in terms of innovation anyways. Now, next on the list is Telstra, an oldie but goldie, kind of. Long gone are their golden days of the $6 to $7 per share, and even though we're using data more than ever now, the company has run into some issues, like some rather big issues. But unfortunately for the big telco, NBN hasn't really gotten off, and it's hitting multi-year low share prices. But given it's at a multi-year low, it's considered as a buy in accordance to Goldman Sachs, which might be why it's on the list with an 88% buy rate from CommSec shareholders. Now, personally, I don't see any forms of excitement towards Telstra. Like, there's not much in terms of innovation or things that are going on. It just has to fix its NBN issues. And even then, the customers are capped to just Australians, which is what, like 26 million people. So yeah, not really a huge addressable market. They're all room for growth. Now, what was interesting in this top 10 list is that we start to head into a different sector, the resource sector. Now, personally, I'm not a fan of anything to do with resources, so I'm not going to delve into the following stocks too heavily. But on number 6 and 7, we have the Resource and Energy Group, up 400% this month, who are gold explorers and recently were able to raise $3.3 million for a Western Australia project by issuing 44 million shares at 7.5 cents. Estrella Resources is the other one, which is up 10 times or 1,000 times in the month of October, which was due to finding some nickel deposits, which, if you know anything about Tesla and the world of electric cars, it requires nickel. Now, if there's anybody watching this video who is heavily invested into these two stocks, leave some basic info down in the comment section below and maybe your bullish thesis as to why you're invested in it. Honestly, I'm not a resource type of person, so I'll leave it up to you guys. Next on the list is number 5 in another new player in Emerge Gaming. Now, I'll be honest, I've never heard of this company, so I did what any reasonable person would do and hit up the Googie. And when I headed to their website, I saw that it mentions that they're looking to exploit the esports market. Sounds like a bit of a scam to exploit a market. I mean, you could have used any other words there like support or even something cringy like revolutionize or I don't know. Anyways, that just didn't sound right with me using that word exploit the esports space. Anyways, it doesn't really mention anything in particular apart from setting up major platforms and different games to take advantage of a space that's going to be growing in the future. They've given some projected numbers on the site. Yeah, I'm not really sure what I'm looking for or looking at. It kind of looks like a Shark Tank pitch. Now, if you have a dig into their website, essentially what they're looking at is creating a cloud platform that allows gamers or people who want to game who just have their mobile phones to be able to do so without requiring all the, well, big, expensive types of hardware that you would need in terms of graphics card, an actual laptop or a computer that can do all those type of things. So that's what they're trying to do. They're trying to bridge the barrier, or I guess remove the barrier that stops people from playing high-end games at a competitive level. Now, I think a lot of the share price increase has come from the fact that they have recently partnered up with Microsoft to launch their game cloud streaming product, which really isn't anything new because Steam has done an equivalent and they're partnering up with a big player in Valve in trying to make it happen as well. And Nvidia's kind of teamed up. So we've got a lot of big players in this cloud space that are trying to do it also, which allows you to just, play high-end games just on any type of laptop, I guess. Now, I did go and search on YouTube for Emerge Gaming. I couldn't really find anything, which is kind of strange, especially if you're trying to launch a platform in some games. And so I had a quick Google, and what I found in terms of promotion is that they're using a MLM style, so that's multi-level marketing, which doesn't sound good so far, but let me continue. So essentially with this program, you refer friends to the platform, and the more you refer, the more likely you are to win prizes. Now, personally, I already don't like MLMs. They're super scammy, and I've seen friends who have just been burned by it. Relationships is absolutely destroyed by MLMs. What I find interesting is that I don't know why they didn't grab the money that they used to hire these companies to use this marketing service and didn't give it to streamers, didn't give it to YouTubers, didn't give it to young people who already have a platform who are highly engaged with an audience that would be perfect for this mobile gaming platform, which would be communicated in a way that their customer base would understand and really engage with. And the thing is, with a lot of these streamers and gamers, if the game is actually good or the platform's actually good, they're more than happy to promote it just as is. And if you pay them just a little bit, and that's probably going to give you the highest return on the investment that you're putting forth to market the game. Now, what's been reported is that they do have a lot of registrations, but my concerns are, one, are they legit? And number two, how many of them will stay around after the prizes and awards have been given out, and once they find out that the game's okay or it's not that good? Because honestly, if it was a good game to begin with, I'm pretty sure they would have went to streamers to have it promoted, or there would have been a lot of hype around it in the first place. Also, generally in the esports space or just in online games in general, at this point, it's not just so much just about the game, it's also about the content creators who make content around the game. It's the hype that they build, it's the communities that they create, different ways that they can show that, people can play the games that really elevate the game from being a good game to being a really great game for people to engage with. So honestly, I'm not sure why they're promoting it in this way when you see a game like Among Us have millions and millions of views based on just content creators making content about the game. And the only way I see them overtaking or doing really well in these developing regions is that they introduce a really smashing game. Like, it has to be really good because there are already so many mobile competitors in these smaller regions, because this isn't new, guys. Like, there are so many good mobile games in different areas. It could be strategic, it could be shooting, it could be so many different forms of games that are already on mobile and that are backed by bigger companies with much more resources. So Emerge's platforms and games really have to be really good to get traction initially and then keep people in the game. Now, what I also found is that a lot of their executives or the staff that they've listed on their site seem to have interest in other companies as well. So I'm really questioning the focus that they might have just on Emerge Gaming as opposed to, any other companies that they're affiliated with. Anyways, guys, in number 4, we have Brainchip. Very popular last month, and along with Mesoblast, which was also very popular last month. Both stocks have also gone down, by the way. So I'm not sure if somebody came in for a quick pump and dump and taken all the profits and then just see you later. But with Brainchip, we've seen a 50% decline from its all-time highs. Many investors and traders had believed that it was going to be the next APT, the next Afterpay, the next tech darling in the ASX. And given they've got a lot of partnerships with NASA and its Al-Qaeda technology, a lot of people thought it was going to go really far. But I didn't really delve into it so much in this channel, and you can check the channel, there's really no videos on it except for last month's top 10 most purchased. So I really didn't understand the hype because the valuation didn't really match the revenue that it was producing, or the lack of it. And obviously it's not even profitable, but that's out of the question because when we're talking about growth, it's okay to kind of run at a loss. Now, if you're looking for other alternatives in terms of this particular tech space, you could also look at Altium or Appen, of which I've made a video both about. But yeah, Brainchip still in there, gone down by 50%. I'm not really interested, to be honest, so let's move on. So the last two are payment companies. They're also in the fintech space, so I should have included them at the start, but I mean, these are the last two, so I'm going to put them at the end. One of the first ones we've got is IOU Payment, which is at number 3, and Dough, which is at number 1 for the most bought stocks in October. Now, if you don't know what IOU are, they basically provide fintech and digital commerce software and services in Southeast Asia, which, as we all know, has a lot of customers, but also has a lot of competition in terms of payment platforms. It is currently servicing the top 20 banks in Malaysia to assist the customers onboarding, credit scoring, processing purchases, and payments, all done at a very low cost. Now, the company seems to be very promising with big players like Citigroup joining their services, but their expansion at the moment seems to be predominantly in Malaysia and Indonesia, which is relatively small in regards to GDP in comparison to, well, East Asia and Mid-East Asia. It's kind of weird. So in terms of my opinion, IOU looks very promising. It'll probably grow as it develops more partnerships, but in saying that, also know in the space, there are just a lot of competitors and it will be competing with big giants like Alipay and all of the other competitors that come with Alipay. Now, the second penny stock is Dough. Yes, a lot of penny stocks on this list. I think a lot of people trying to grab for the next Afterpay, seriously. So another fintech operator, which was at 7 cents, has jumped to 26 cents. So it doesn't seem to be big, but with penny stocks, obviously, if you put it into percentages, it sounds a lot bigger. And it sounds way more impressive for me to say that they've jumped up 300%, as opposed to 10 to 20 cents. So for those who don't know, the company basically collects consumer banking info and provides a financial coaching, mentoring, or guidance for the user. They've also had a partnership with MasterCard recently to assist with their growth and intend to monetize their platforms in the future through wealth management, cashback rewards, and looks to integrate other accounting software to make it a one-stop shop. Now, my thoughts are the company is in its infancy and it's way too early for me to make any types of calls. In saying that though, if they're looking to charge a subscription-like service in the finance space, they're going to run into a lot of issues because Westpac tried to do that with their zero interest credit card and it really didn't pick up. And in regards to wealth management, if somebody really wanted to, I guess, invest their monies, a lot of people can just go to Vanguard, which have a very low management fee and, well, be quite diverse across the markets. So the thing with fintech or finance is a lot of these things aren't new, like cashback rewards, a lot of other companies have done it already. I think the best one at the moment is HSBC giving about 2% cash back if you tap and pay under $100 on their card, but you have to put $2,000 in per month. There are so many examples of finance companies already doing this, traditional financiers. And so for these guys to really get off the ground, it's going to be very difficult unless they provide a very good user experience like Afterpay. But again, I really don't see people paying for a financial service to basically look after their money and maybe give them some tips along the way. It has to be a very, very good app, and the bank has to do so many other things and automate so many other processes for their users that they, would spend time doing otherwise. Anyways, guys, that wraps up October and this video. I hope you guys are all doing well. It is Halloween, the 31st of October, so I don't know if you guys are going trick-or-treating. It's like raining in Brisbane, so it is none of that. Plus, I'm a little too old to be doing that. But yes, guys, take care. I'll catch you guys next time. Cheers.